What is ratio analysis? Ratio analysis is a mathematical technique for analyzing a company's financial documents, such as the balance sheet and income statement, to gather knowledge about its liquidity, operational effectiveness, and profitability. There are 5 ratio and 90 spread ratio based formula in this topic. Your company financial ratio can give you useful information of profitability, liquidity, efficiency, and other factors. You may use this ratio to see how your business has done over a specific time, to understand how your firm stack up against other companies in your field. You may also compare its financial ratio to an industry average. Investors may also use financial measures to assess a company's health. Monitoring important financial statistics is a smart idea if your firm is publicly traded, since these figures might affect how investors see your business. The formula for current ratio is current asset divided current liabilities. So, my analysis is 2020 has a greater than 2031 in current ratio, which is 2020 reached 2.25 times and 2031 reached 1.51 times. Flora have to increase their liquidity for adding for their inventory and able to pay short-term cash. The formula for quick ratio is current assets minus prepaid expenses minus inventory divided current liabilities. So, my analysis in 2020 has a greater than 2031 quick ratio, which is 2020 reached 1.78 times and 2031 reached 1.51 times. Flora have to take an action in adjustment of company prepaid expenses and add inventory for avoid loss. The formula for net working capital is current asset minus current liabilities. So my analysis is 2020 has a greater than 2031. Net working capital, which is 2020 reached 340,956 and 2021 reached 243,071. Flora have to have a better profit to make their company become more stable than 2021.
So I'm going through to inventory turnover. So 2020 has a greater than 2021 inventory turnover, which is 2020 reached 6.17 times and 2021 reached 3.29 times. So Flora have to check and always update their inventory to make sure that no extra stock available. With that, company can lower the quantity of greater inventory turnover. Then I'm gonna go to average collection period. So 2020 has a lower than 2021 in average collection period, which is 2020 reached 89 days and 2021 reached 136 days to collect debt. So Flora need to make the time collect debt quicker by change the credit policies. And then 2020 has and then I'm going to non-current asset turnover. 2020 has a greater than 2021 is in non-current asset turnover, which is 2020 reached 6.04 times and 2021 reached 3.83 times. Flora have to make the firm more effective in terms of producing sales from non-current assets. Next, total assets turnover. 2020 has a greater than 2021 in total assets turnover, which is 2020 reached 1.59 times and 2021 reached 0.98 times. Flora have to make their organization effective in terms of generating sales by getting total asset turnover good. And then debt ratio. 2020 has a greater than 2021 in debt ratio, which is 2020 reached 59.91% and 2021 reached 56.34%. So Flora company has increased their debt, but it have to decrease more due to their total asset is lower than their debt. Next is debt to equity ratio. 2020 has greater than 2021 in debt to equity ratio, which is 2020 reached 1.49 times and 2021 reached 1.29 times. Flora have improvement than before. It have decreased debt to equity ratio. And then I'm going to time interested earn. 2020 has a greater than 2021 in time interested earn, which is 2020 reached 10 times and 2021 reached 5.15 times in time interested earn. So Flora had increased their time interested earn and will facing a problem to pay interest. Flora Berhad needs to corporation will be able to pay off debt more quickly if the amount of debt on its balance sheet is reduced. And then
next, gross profit margin. Gross profit divided by sales. For comparison, 2020 we got 39.71% and 2021 for 35.60%. For analysis, 2020 has greater than 2021 in gross profit margin, which is 2020 reached 39.72% and 2021 reaches 35.60%. To help boost productivity, Flora can construct new production facilities or make equipment purchases. A gross profit margin gives the business the resources and flexibility it needs to innovate, break into a new market, and grow quickly. Next, how to improve the gross profit margin is increase efficiency and productivity, which set a goal to track time by tracking how much time various tasks take and avoid unnecessary meetings. Next is operating profit margin. EBIT, expenses before interest and tax, divided by sales. For comparison, 2020 we got 15.18% and 2021 for 11.62%. The analysis is 2020 has greater than 2021 in operating profit margin, which is 2020 reached 15.18% and 2021 reached 11.62%. Flora decline in operating profit management confirms that the company is not making enough money from commercial activities to cover all of the associated costs required in operating that business. How to improve the operating profit margin is retention. Do all you can keep to your customer purchasing from you. Perhaps you can better communicate on how to use the product or give them personalized promotion. Finally, nurturing your current customer eliminates or considerably reduces the acquisition or marketing costs on that second and all following transaction. Next is net profit margin. Net income available to common share divided by sales. Comparison, 2020 by 10.42% and 2021 for 7.02%. Analysis is 2020 has greater than 2021 in net profit margin, which is 2020 reached 10.24% and 2021 reached 7.02%. Flora ratio shows that the business is unable to control costs, deliver products and services. They should save costs on labor at the office and on their utilities, both inside and outside the organization. How to improve the net profit margin is by decrease operating costs. It's possible that you have high operating costs because you don't see how to reduce them efficiently. For example, expensive supplies can greatly increase operating costs. To fix this, see if you can buy common items in bulk to get a discount. Next is return on equity. Net income available to common share divided by common equity. Comparison 2020 by 40.70% and 2021 for 15.82%. The analysis is 2020 has greater than 2021 in return on equity, which is 2020 reached 40.70% and 2021 reached 15.82%. Flora may be having a loss of their investor, given that organization can raise money through debt financing and equity financing. This company should use more financial leverage. How to improve the return and equity is by increase the profit margin, as profit are in the numerator of the return on equity ratio. Increasing profit relative to equity increase the company return on equity. Next is return on assets. Net income available to common share divided by total sales. Comparison 2020 by 16.31% and 2021 for 6.90%. Analysis is 2020 has greater than 2021 in return on asset, which 2020 reached 16.31% and 2021 reached 6.90%. La Flora will have a trouble because of they fail to get a revenue. The effectiveness of the La Flora current assets, which include cash, account receivable and inventories, can be increased. How to improve the return on asset is by cut the expenses, then automatically you increase the revenue you get to keep. This creates a higher return for you. As the bank's financial officers, we choose to comply with their request loan to La Flora Berhad. The business still had very strong earnings in 2020 despite the drop in profit performance in 2021. The year 2021 had a decline in prosperity due to pandemic, which also affected the company's earnings. In conclusion, the loan shouldn't be approved. This is because, as we can see, effect of the recent pandemic, La Flora Berhad net has dropped from 136 billion to 66 billion. This will make La Flora Berhad company cannot survive during the pandemic. Moreover, from the ratio that has been calculated and compared in 2020 and 2021, most of ratio are dropped in 2021 during the pandemic. For example, operating profit margin ratio has dropped from 15.18% in 2020 to 11.62%. This indicates that the firm is not earning enough money from business operations to pay for all the associated costs involved in maintaining the business. Next, La Flora current ratio decreased from 2.25 times to 1.51 times, and quick ratio from 1.78 times to 1.10 times. So we can see that La Flora Berhad insufficient of cash. Moreover, La Flora assets turnover also decreased from 1.52 times to 0.98